Welcome to the AACFB's 2021 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB and I'll be your host. Our presenters today are Robert James, Meg Roberson, and Stuart Warba. They are with Gulf Coast Business Credit. Gulf Coast Business Credit is both a funding source member and a gold sponsor of the AACFB, and I'd like to thank them for their support of the association. Before I introduce Gulf Coast Business Credit, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit your questions in the box and they'll be answered by the end of the webinar. The entire webinar should take no more than 30 to 45 minutes. For those of you who would like to review this webinar at a later date, it will be posted on the 2021 Meet the Funder page of the website and will be emailed to the AACFB membership. At this time, I'd like to turn it over to the Gulf Coast team. It's all yours.
Hello.
Hello. Hello.
Great. I think, Stuart, you want to start us off?
Yeah, I'm going to introduce myself. I'm Stuart Warba. I've been with Gulf Coast 13 years. Meg Roberson is our national sales manager. She's been here 14 years. What we're going to do is basically, we've got a slide presentation. I apologize, I forgot. Rob James, he's been with us 6 years.
9.
We've got a slide presentation to go over exactly what Gulf Coast Business Credit does, exactly who we are, how we can help your clients with a cash flow for their small businesses and mid-sized businesses, as well as produce consistent residual income for the lifetime of the deal. So with that, I'm going to go ahead and turn it over to Meg and allow her to start the introductions and start the process.
Great. Thank you, Stuart. Can everybody hear me?
Yes.
Okay.
Yes.
I'm going to just go over a little bit about, as Stu mentioned, I'm Meg Roberson, and I'm actually physically located in Austin, Texas. I manage the sales and underwriting teams nationwide. Rashenda, if you'll actually get back to the other one, that'd be great. That one before. So today we'll talk about who we are and then the solutions that we provide. We'll talk a little bit about the industries we typically focus on, and then what's in it for our brokers, and how brokers can be most efficient, close more deals with Gulf Coast, and hopefully we'll expand our broker network after this webinar. All right, next slide. A little bit about the history. Gulf Coast Business Credit is a division of Gulf Coast Bank and Trust Company. This parent relationship makes our, as a funder, this makes us unique. And the ways it makes us unique is that, especially in our segment of the industry, we're a division of the bank and we use the bank's cost of capital to fund our clients. The majority of our competitors borrow from banks and use equity and loans to fund their clients. So they're not really a direct lender. They're an indirect lender, meaning they get their money from someone else and they re-lend it. Well, Gulf Coast is a direct lender, so it makes not only our pricing and our structures more competitive, but it also, I think, provides a good amount of credibility and more credibility to the clients that we serve. They know that they're dealing with a regulated financial institution, and they know they have a trustworthy partner in Gulf Coast. In addition to that, Gulf Coast has been doing factoring and asset-based lending for a little over 21 years now. So there are banks that get into our space occasionally, and they typically get out fairly quickly. They have our segment of the business is more risky, and you have to manage the relationships right, or you will lose money. So there are a lot of banks that get into our business and get out pretty quickly. But Gulf Coast has been in the space for over 21 years. Our bank originally was founded in 1883 as American Savings Bank. And then in 1990, a group of local investors led by our current bank president, Guy Williams, took over American Savings. Now, today we are just now, I think, approaching 2.5 billion in total assets. So we're a large community bank. So we still have that community bank mentality. We have really good, strong relationships with our clients. Can get approvals very quickly. So it's really the best of both worlds. for the clients that we serve. We have over 3,000 clients nationwide and within our division. This year, we're a gold sponsor of the AACFB, and we'll be an exhibitor in Nashville. All right, next slide. Stuart, do you want to pick up here and talk about our product, or at least talk about the first one?
Yeah, thank you. Yep, thank you, Meg. Accounts receivable factoring, I'm not sure how many of you are actually familiar with what the process is or exactly what the product is. Forget about the process, but actually what the product is. What we do is we're not lending debt to a company. So where we come into play is if you've got companies that have products or services that they've billed for already, so completed work. Best example would be a transportation or trucking company. That company goes out and picks up a load of Diet Coke from Atlanta, Georgia, and drops it off in Denver, Colorado. That process may take 4 days. When they're done, they're going to go ahead and they're going to have a bill of lading showing that the load is completed, and they're going to go ahead and have an invoice. Now, obviously, if they're billing Coke, Coke might have, say, 30-day terms or 45-day terms. Well, that truck's got to leave Denver and go someplace else, hauling marshmallows or lumber or whatever it's going to do. And they've got to be able to pay that driver, and they've got to be able to put fuel in that truck. So what factoring or accounts receivable financing does is we will provide a predetermined percentage based upon the face amount of that invoice. So in this scenario, let's say it's $1,000 invoice and they were approved for 90%. And again, that will fluctuate depending upon the industry. It could be as high as a 99% advance. It could be as low as a 75% advance. Depends upon the industry that it's in. But in this scenario, let's say it's a 90% advance. We would fund $900 of that invoice when we get the correct paperwork in. And then when we would then wait to get paid back from Coke in this situation, we would take our fee out of that 10% that we're holding, and then we would give the balance on to the customer. So you can translate that into, staffing at the end, a staffing company or the staffing industry at the end of every week, they're going to go ahead and come in with time cards. Obviously, the staffing company needs to pay those employees. They might have terms with their customers of 30 days, 45 days, 60 days. So they've got to run payroll every week. And unless the company, our customer, or your customer, I should say, doesn't have deep pockets and a lot of cash in the bank, they would come to somebody like us where we would be able to front them that money. And then we would go ahead and we would wait to get paid from the customer. Some of the industries, and we're going to touch on this a little bit later, but some of the industries that really are in tune with factoring is the transportation industry, the staffing industry, manufacturing, oil and gas industry. And again, those are all industries that typically they've got little to no assets. So you really can't go to a bank and say, hey, I've got $1 million payroll. Honestly, a staffing company really only have is the people and maybe a building that their office is out of, but typically that's even rented. So traditional banks aren't going to give $1 million or they're going to give $500,000 just based upon paper. And that's where we come in. And I'll segue this into the difference between an MCA loan, which I know a lot of brokers are very, very familiar with. And what we do is an MCA loan is a one-hit wonder. They're great. They provide the capital that's needed for that one-time shot, but oftentimes it doesn't take into consideration the ongoing basis. So giving a transportation company $50,000 to be paid back over 4 months or 6 months or 8 months might not be enough to keep them going, because during that time period, obviously they've got to continue to put fuel in the trucks as well as go ahead and pay their drivers. So that's one thing to keep in mind. And I know a lot of the brokers out there like the MCA loans because they're high commissions on there, which, that's obviously what you guys are in this industry for, is to make money. But it's not a residual type basis. So what I try to explain to brokers is before you put the MCA loan in place, see if you can get a factoring facility in place, and then go ahead and, because you guys on an MCA basis will go in a second or a third or a fourth position. All we need is a first on the AR. So, we can come in, you can go ahead and, solve their immediate need for cash flow and then on a going forward basis. And then you can provide them a bump of additional capital with that MCA loan. So that's really the nuts and bolts of what accounts receivable or factoring financing is. That's, kind of our forte, what we do. We've also got a asset-based lending group. And with that, I'll turn it over to Rob and let Rob explain a little bit about that. And that's just a little bit different on the factoring because it'll take into account inventory and equipment.
Yep. And then I'm actually going to do asset-based lending, and I think Rob's going to pick up when we get into the residual income part. Okay. So we have, depending on where the company is in its business cycle, we have various products that could meet the needs of the client. And asset-based lending, as Stu mentioned, is one of them. And typically that does bring to the table other assets outside of AR. So it could be inventory, equipment, real estate. And Gulf Coast has grown organically, and then also by acquisition. We've acquired several different companies. Seems like we've acquired 1 to 2 each year for at least the last 5 years. One of the groups we acquired was an asset-based lending group. And so that brought to the table the ability to kind of have a product that we could either transition our clients to if they're factoring and their financial strength warranted it, and maybe they need additional availability outside of just AR, or if companies came in and they qualified for more of an ABL structure. We are looking more at the financial strength of the company, but we don't have financial covenants, and we do have the ability to grow with clients. So that's a little bit on our ABL product. Next slide, Rashinda, give it. And then, as I mentioned, we do have kind of we can help clients kind of graduate into different products as we have history with the client, or their financial strength, their financials warrant kind of a graduation. One of the products we also offer is called a ledger line of credit. This really is great for clients that maybe they have average invoice size is very small, or their paperwork that their invoices and any backup documentation, maybe it's just extensive. And so it wouldn't really work well to submit invoices for funding because of the amount of paperwork that might be involved with something like that. So we do have a product called the ledger line of credit, which really, it pulls still a purchase, but it pulls the receivables together, and then the client submits a borrowing base for funding. And then we also work with a lot of different industry partners. We will do some PO financing and some loans. We are a full service bank for our clients on the side. We often also bring in partners to maybe help us with a PO request if it's like an ongoing PO request. But we do have the ability to kind of do some side loans if a client needs something, maybe to buy a truck or fund a PO, get through a large order. We do have that ability to do that on a one-off basis for our clients.
Yeah, and Meg, I just want to springboard off of that in that, and again, this is just from an education standpoint, because oftentimes we speak to brokers and they're just not familiar between the different products. Factoring or accounts receivable financing, I would say, is probably the easiest point of entry into what we do, and that we can work with startups. They don't have to have financial strength. They don't have to have positive cash flow year after year. And as Meg was saying, from there we can graduate them into an ABL line or a ledgered line of credit. And from there, typically each one of those products is going to require more financial strength for the customer, for our customer, where we're going to want a P&L, we're going to want to see a balance sheet, we're going to want to see some strength to that company. The factoring piece of it, I don't want to say we're dealing with just the bottom of the barrel, but the factoring piece of it, we're really looking at who they're doing business with. And that's where I said the startups can come in, and they don't have to have the strength. And Meg, I don't know if you want to springboard off of that, but that's just kind of, I wanted to make sure that was clear is that, as you go up the food chain, the less and less paperwork that's required is typically requiring more and more strength of the borrower.
Yep. Yeah. And history with us also, as I mentioned before, just us having history on the account, and really also helps us to help graduate a client. And the great thing about that for our brokers is that, Rob's about to go over the residual income stream, but our clients stay with us typically longer than average. So average for a client in the factoring space might be 12 to 18 months they stay with a factor, and then maybe they go to a bank loan. Where Gulf Coast has the ability to really work with a client and maintain those relationships, move them to a different product that maybe better meets their needs as the company grows, diversifies, whatever the case may be. And so our brokers typically receive that residual income for a much longer period of time because we're able to maintain those relationships as a bank, and with a lower cost of capital and more products to bring to the table. So our clients typically stay with us on average 4 to 6 years, sometimes many much longer than that as well. But I think that's really important, a really important differentiator for a broker when they're considering and trying to figure out where they want to send their client to.
Hey, Meg, I just got a notification, and I don't know how to do it. It looks like Michael DeHamel raised his hand.
I think Monica mentioned she was going to go over the questions. I don't know.
Okay. I just got the pop up.
Is that going to?
I got a little hand sign. So.
Do you want to take questions right now?
Sure, that's fine with us.
Okay, Michael, you can unmute yourself and ask your question.
Hi, thanks for taking my question. This is Michael with Small Business Capital. The real gap, and I hear you talking about factoring and then ledgered lines. The real gap that I've found is those clients that, and I have one now, that are sort of betwixt and between. So they're a wholesaler, they're reluctant about having all their payments go to a lockbox because of the type of clients they have. And they're a decent company, they're profitable, good cash flow, not quite bankable for a line of credit, but they're really looking for something, I think, that's more like your ledgered line of credit. Can someone come into Gulf Coast right off the bat for a ledgered line of credit?
Sure, they can. It really depends on how, what their financial statements warrant and, all the package that we receive. I will say that most of our relationships do have a lockbox. They do have controlled accounts for controlled cash. But another great thing about being a part of a bank is that our communication to their customers, which is typically the thing that we see companies, their hesitation is, not only am my clients going to send their payments to a different location, but they're going to send it to, XYZ factoring company, where with us, their clients, because it goes to Gulf Coast Bank and Trust Company, their clients don't necessarily know that they're factoring. They could have a line of credit. They could have, an ABL deal. It is all controlled, but it does have that Gulf Coast Bank and Trust letterhead that goes out. So it really, I think, gives a better feel and it makes companies feel more comfortable factoring with a bank. Just basically the perception their clients, what we call the debtors, perceive with that communication. So, but they can definitely long answer there. Michael, I apologize, but they can come in for a ledger line of credit off that.
Great.
And the other thing too, Michael, is to go off of Meg's point, because we are a bank, we make the decisions. I don't know necessarily me, but because it's our money and we make the decisions, we can get creative when the time is necessary for certain customers, like as Meg said, with bank letterhead and the bank naming and so on and so forth. Whereas independent companies that are borrowing their money, they don't have that same flexibility because, in the line that they're borrowing, it states how it needs to be sent in. Whereas with us, we've done co-branded introduction letters and things of that nature.
Got it.
Okay, we also have another question from Ronald Goodman. It's, do you factor importers' invoices?
Meg, you want to take that?
Sure, I can. So maybe, Ronald, do you want to maybe give me a little bit more information on that? So an importer based in the U.S. with a U.S. entity importing product from overseas and selling in the U.S., or can I maybe tell me maybe give me a little more clarity there. I don't know if
I don't
he
see.
can speak or.
Yeah, Ronald, if you're listening, if you could put a little more information in there, I can share that with the presenters. But if you guys want to go ahead, I'll let you know when he's got that in.
Yeah, I mean, I can answer it based on what I think he's asking. Oh, based in the US. Yep. So I mean, for example, if this is not what you're asking, let me know. But we do have a client that imports product from overseas, and they resell to gas stations throughout the US. So, you know, they'll bring over big containers and then they resell product. And so that is something that we do, if that's the question.
He did say based in the US.
Yep. So if it's an entity based in the US, that is something we can do.
Okay.
Typically, we don't want to fund companies that are not US, that are not incorporated in the US. But if they're importing a product from overseas, their company is incorporated in the US and they're selling to US entities, that works for us.
Okay. Steve wants to know if you can help the brokers with marketing, and who do they ask for that?
Sure. And we can follow up. We have a marketing exec that can work with you, and then Stuart and Rob. I would say direct Steve, you can call Stuart and Rob directly to get started with that question, and then they'll work with our marketing exec internally to get some information out to you.
That's all the questions we have right now.
All right. All right, industries, Rob, or Stuart or Rob, do you want to go over the industries? You want me to?
Yeah, I'll go over that. Can you hear me?
Yes.
Okay, these are some of the top industries that we do focus on as far as invoice factoring is concerned. I think number one is probably one of the biggest ones that we do is transportation, carriers, and brokers. Obviously, you see it all the time on the news. There's a shortage of transportation drivers and so forth right now, but these guys, like Stu said, you touched on this earlier, you know, they can't afford to go maybe 30 to 45 days, you know, without getting an invoice paid, just due to, you know, they may have drivers, fuel's expensive, you know, the truck breaks down, obviously all that's a cost to them, so they need their money up front. Same with temporary staffing. We do a lot of temporary staffing, especially currently in the healthcare industry with, you know, obviously what's going on in the world right now. Oil and gas, that's a big one for us as well. We do have sales, business development officers set in the Shell plays, and, you know, we work, Texas is obviously the biggest one we got, but, you know, I'm in Denver, which is growing a little bit for the oil and gas, and close to Wyoming. But as you can see, manufacturers, distributors, government, wholesalers, and technology, we'll take a look at all those industries. And what I like to tell my clients when I get them, if it's a good invoice and the debtor is strong and solid, whoever it is, we'll take a good look at, no matter, you know, really what they do. You know, but before the next slide, you know, residuals and brokers and sending us leads. So what I like to tell my brokers is, don't turn a deal away, you know, give us a shot at it. We don't waste time. I know Stu and Meg, I mean, we work a lot, obviously. And if there's a deal that you get at 8 o'clock at night and you need to run it by us, I know Stu will pick up his phone, Meg would as well, but just email us and we'll get right back to you. Obviously, in this industry, when a client needs money, it's speed to the sale. Whoever gets there first, obviously, is going to get their business. So if you run across any of these deals, or you just want to share, you know, one with us, give us a call or an email, and we will get right back to you. No doubt about it.
Yep. As Rob mentioned, you know, we do have a variety of industries in our client base, and the main common ground between all of them is it's all business to business. So it's not companies that are doing business; they're selling to individuals. So it's all business to business, but many different industries.
Okay, so residual income. Obviously, we probably all know what this is, and as the first slide showed, money and money over and over again. Again, Stu touched on the MCA part. You know, an MCA, a real estate deal, is usually a one-time payoff to you. You know, obviously that's good if that's what you're looking for. But I think over the long haul, as Meg said, most clients stick with us an average of 4 to 6 years. So I think, you know, I think you're going to make a lot more off a residual if you send a deal to us that we can get factored over that time frame. Again, like they said, we are a bank. We're able to go very low on rate, so we don't have a problem with you know, beating somebody else as far as rate is concerned. You know, we're very well at what we do. So obviously, we want to pay you as long as we can. And residual income, that's the way of doing it. So if you have anything, again, please run it by us. The broker program, it's a very simple program. We can send you an email if anybody's interested. I think our email and phone numbers down below at the last slide. Send us an email today. We can send you a little bit about our broker program. And how the broker program works is this. We get a lot of leads, obviously, from our existing clients. You know, we take great care of them. The rate is phenomenal. They're never going to leave us because of rate, we hope. Our back office is wonderful. You know, we get back to these clients, and that's the key. So if you do have a lead, just give us a call. Now, I tell my brokers again, and Stu, I'm sure you do as well, we can either cold call the lead or say, you know, Stu gave me this lead. He wanted me to give you a call. Want to see how I can help you with, you know, invoice factoring. Or I might just call them up out of the blue. If it's a cold call lead, yeah, this is Rob with Gulf Coast Business Credit. Just wanted to check back in on you and see if you're interested in, you know, factoring. So either way, you know, if you know of somebody who may need that money, we can do a cold call on it. So just let us know when you email it to us or you talk to us that, you know, cold call it, or please just say, you know, Stu said to call them, and we can do that either way. As far as the relationship, like I said, Meg touched based on it. They're with us 4 to 6 years. We like to start, you know, our clients off with the low rate. You know, there's a lot of factors out there that'll start them off, you know, 3 to 5%. We really don't like to do that because we know that they're just going to shop in 6 months. We don't want them to leave us. So if we go in with the low rate from the get-go, you know, whether it's a brand new business or not, that's what we're going to do. And we know they're going to stay with us. We don't have to worry about them saying, look, your rate's too high. I'm 6 months into this deal. I'm going to look elsewhere. So we build that long lasting and profitable relationship, you know, obviously with the client, but for you as a broker, you're going to make that residual income for years and years to come. So,
and typically to go off of that, the residual, we start brokers out at 10% on the fees collected for the life of the deal. So, and again, when I do this and I try to explain this, people are like, well, that's not a lot of money. You've got to look at this more so as, you know, you're basically handing off your lead to us and you're really done with it other than collecting a check every month. Now, obviously, if you've got a relationship with that client, certainly stay in touch, do whatever you need to do. But on a going forward basis, you're just getting paid every single month, 10% of that. So if you've got, you know, a deal that turns over, let's say, you know, $15,000 in fees, you know, you're getting a check for $1,500 a month every single month. You got to realize that that's just one deal. If you got 4 of those deals, you know, now you're making $6,000 a month every single month as long as they're with us. So, you know, it's a nice complementary piece to the other products that you may be offering, that you're collecting your commission once that deal funds. And it's nice to go to the mail, even if it's an extra $1,000 a month. I mean, it's still a free $1,000 that you're really doing nothing for, because we're handling all of the back office and we're handling all the paperwork and the processes, and you're just basically getting a check or an ACH. You know, and then, like I said, if you get a larger deal, I've got some brokers that make $10,000 a month. So it really just depends upon how hard you want to work it and how well you are into the industry. And like I said, we're not here to tell you, you know, give up on everything else. That's obviously not the case. We're here to kind of say, add this to, you know, this to you, what you're currently providing, selling, and the 1,000, 2,000, it adds up, quicker than you think.
I have a couple of questions. Steve says, I've got a factor that still sends paper checks via mail. Do you pay digitally or also mailed checks?
We either pay through wire or an ACH. Steve?
Yeah, we can do either one.
Okay. And the other one is, if I bring you a customer for PO AR financing and they call you direct for equipment financing or vice versa, how do you handle that?
I mean, we typically get back to, we also get a lot of referrals from banks that do not have our product. And we're very sensitive to their relationships, and we try to wrap in and make sure they earn business as well. So if it's a client, for example, if a bank refers it, we will often waive our wire fees on our side for the client if they bank with the bank that referred it, so that the bank also wins that relationship. So if we know that the broker wants us to send anything back to them, our expertise is really the AR and ABL loans or lines in the factoring. So we do equipment and we do some of those add-ons to really for customer service to help with the client, but it doesn't benefit Stuart or Rob or me. So if we know the broker sends it over and they want us to make sure that any ancillary business comes back to them, we certainly do everything we can to get that back to them if that's what the question was.
I want to give a thank you to Steve Felt, who put in the chat box to everybody. He's been clients that have been factoring 3 to 4 years, and he's been paid, 20,000 plus annually. And as a broker, he obviously sees the value in it. So I appreciate that, Steve. Thank you.
And just real quick, obviously, we do a lot of business, being in the business 21 years and so forth. We're very well known. We take care of our clients. As Meg said, and I don't know if there's anybody on the call right now, but we do get a lot of business from other banks as well, or commercial lenders. If they're not able to help a client out, we are a trusted partner for them. And these are bigger banks as well, and banks across the country. So we know the importance of, if you give us a lead, we're going to take care of that customer really well. And if they do, if there is a banker on here, if they do become bankable again, we'll let them leave to go back to you. Obviously, you put your trust in us, and we appreciate that. So. Hello?
That's all.
Any other questions
we have right now? That's all we have right now.
Right.
Oh, it looks like Michael has his hand up again.
Yeah, thank you. I just didn't know who I should reach out to, which one of you after this call to bounce some deals off you.
Call either one of us, Mike, Stu, or I, or Meg. The information, I think, is at the bottom of the screen with our contact information. We'd love to obviously chat with you, see if we can help you out on those.
Yeah, I'd say definitely Rob or Stu, and they'll be the individuals that'll be attending in Nashville this year too.
Great.
Yeah, and Meg, since you brought that up, if anybody is in Nashville and you'd like to meet Stu or I when you're there, we'd love to sit down with you and visit with you there as well. So we will be there on, what is the 8th through the 10th?
That's
I believe.
Yes.
Yeah, and to go on to the next slide that Rashinda has placed up, and we've kind of touched on this, so we'll kind of be able to move through this pretty quick. As a broker, the importance, what you're looking for is the quality of the paper, the quality of the receivable, the actual documentation, which again goes back to the quality that you get, and then the first position lien on the AR. That's the most important thing. So we can be in second position, third position on the equipment, the building, whatever it may be. We just need a first on the AR, because and the quality of the paper is, because that's really all we're buying. We're buying pie in the sky paper and hope that it pays off. Less important, again, is the financial covenants. We're not underwriting deals to, a 1.25 fixed charge coverage. And, we're not concerned about EBITDA and EBITDAR and so on and so forth. So those really are not all that important to us. Now, again, yes, as you go up the food chain and you might want a ledger line or you want a traditional ABL, those are going to come a little bit into play, or more so into play, I should say. But out of the gate, we're really just looking at the paper. Clients to avoid or industries to avoid is construction. We do own a company that does do construction factoring, but it's certainly not an industry that you want to, target or market to. It's, a niche one-off type you might get done. I've got a doorknob company and a hinge company. I got them funded, but I'm in a traditional straight construction where there's progress pay and paid when paid. We're not going to do any of that. Medical insurance, Medicare, Medicaid. And that's simply because, you could bill for $1,000. They cut it down to $300. If we've already advanced $700, we're upside down out of the gate. So it's just, you can't do it. And then, like I said, the progress billing, again, something to stay away from. If you've got, let's say, 10 payments coming in over the course of the year, and on payment 7, they can say, well, you messed up back in March, we're going to offset this payment. That's why you don't want to really touch those industries, because, they don't have to pay and it's really in their contract. And then as far as the advance rates, like I said, I was more conservative. I said 75% to as high as 100% advance rates. And, the higher advance rates are typically going to be transportation and staffing, because there's no ability. Well, there's very little ability to offset in those type of industries. So that's why they're getting a higher advance. And then our discount fees are going to range anywhere from 0.5% up to 2%. And Rob touched on this, because we are the actual bank and it's our money, our rates are not 3%, 4%, 5%. And I know that's a lot of times I hear from brokers that are like, oh, you're just too expensive. I better off putting them in an MCA. It's, I get more money anyway. Yeah. I mean, we can do deals at 1%, fixed for 90 days. Most people, that's unheard of in this industry. So, that kind of covers that slide as far as the playbook. And, I don't remember what gentleman asked about, if there's any ability to market or, help you guys with marketing. This is kind of the introduction to it. We can kind of go from there if you add any sort of specific industry to target market, so to say. Take it, Rob.
Okay, Gulf Coast Business Credit, we have the ability to obviously do fast approvals. Like I said, if you send a deal today, we'll probably give you some sort of an answer, obviously based on what time it is. Once we get it turned into our underwriter, such that would be tomorrow morning, we give you an answer. Again, Meg's always available to us. So if there's some certain type of deal you want to run by us and it's late, again, call us or email that. We'll get with Meg and, we can probably get back with you right away. As far as the 50% lower there, Stu just talked about it on the pricing. We really see this every day in the transportation industry. There's companies out there charging 3 to 5%, obviously based on how much, that client's factoring per month. We can go literally 50% lower, than that other factoring company. And that goes back to the residuals. If you put them into a high rate somewhere else, what is that client going to do? They're just going to leave and go shop and look for another place. We start them off low. They stay with us typically 4 to 6 years, as Meg said. The policies of procedure, obviously we are bank owned factor. So, we do have to look at it from a banking approach. With our clients, we are lending money, factoring money. So obviously it's going to be, under our bank. The flexible contract terms ranging from 90 days to 12 months. I think that's pretty standard in the industry. We're not afraid to offer a 90-day contract. Again, let me just go back to the transportation industry, for example. It can be a brand new authority, some guy that just got his authority, this week. We will factor that person, that company, and still start them off at a low rate. We have no issue doing that. And if they, him and haw about the contract, the terms of the contract, we'll do a 90-day contract. Most likely that client's not going to leave in 90 days. Again, we take great care of them. There's no reason for them to go and pay a higher rate and stuck in a year, somewhere else. We do calculate from our funding date. Some of our competition out there will do from the invoice date. Well, so what that means, if somebody went and did business on August the 1st and they factored that factoring company is going to start the pricing then from that date of August the 1st. Whereas us, we'll start it from the day we fund them. So if we got that invoice, Monday and we don't fund it till, Wednesday, we don't start that until today's date. So they're getting a little bit of an advantage there. As far as the next one, we allow the customers to finance as needed. You don't have to factor in every invoice. Now, obviously, we like to see payments coming into our lockbox. And I'll give you an example. Just say somebody's doing $100,000 a month in factoring. And all of a sudden they come back to us and say, oh, I need, I got this big project I just won on a bid. I need to raise my credit facility to $300,000. We could do that, but obviously if we see payments coming in from non-factored invoices, it just helps our process out and makes it a little faster for us to obviously bump them up to that 300K. So if it's not factored, and I tell my clients, look, let the money roll in. We're a bank. You can take that money out as soon as it posts. It's no different from you getting it in the mail. You can take it out immediately. But if we see those funds coming in, we're able to help you, grow your business. Then when you do go up to 500 grand, it just makes it, or 300, it just makes it that much easier for us. Gulf Coast has the ability to partner with a bank with a working capital line. And for example, as I touched on it, just say another bank calls us up, or a client calls us up and they're like, look, my business is growing like crazy. But the issue is I have a current line of credit with my current bank for say $500,000. And then my question is, look, how much do you owe on that 500 grand? And the client's like, well, I owe 300 grand. That's what I've used on my line of credit. Well, in all the cases, that bank has a first place lien, UCC, on their accounts receivable. So there's one of two things. If the guy or the person owes $300,000 to the line of credit, we can pay that line of credit off as long as they have enough invoices to factor at that time to pay the line of credit off. Okay, then we pay the bank off, they release the lien, we take it over. If they do not have enough to pay that line of credit off, we can do the carve out, which means just say a client has 10 debtors that they're working with, okay, but they can't get out of their line of credit. They can't get away from the other bank. If their bank allows them to, we can carve out maybe 1 or 2 or 3 of the debtors for them so they're able to factor that and get some working capital up front. And they still have their line of credit in place. All we're doing is, all the other bank is doing is allowing us to factor 1, 2, or 3 clients to help their client out with working capital. The next one provides comprehensive. Maggie, you want to hit that? The screen just went off on me.
Oh, sure. Yep. So, with that, with the client, well, as part of our service, part of our fee, no additional fees for this service. But if one of our customers brings us a new client they're considering doing business with, or they're about to sign a big contract with, and they don't know a lot about their financial strength, or they want to make sure that that it's a debtor that we were comfortable factoring at that level, they can bring a name, address to us, and we can provide and share the mostly public information through DMB reports and Ansonia reports, so we can share information with them on the credibility of that client. So, there's often a lot of companies out there that they just want to make a sale. They're not really sure. They're not really worried about who that customer is they're working with. They just want to get the business and get it out the door. well, we, as mentioned earlier in the meeting, we're really looking at the strength of their client base. That's really our source of repayment. So we can run all those checks for our customers free of charge, and we can share all the reports and just give them a little overview on the strength of their clients that they're considering doing business with or bringing on board. And maybe it's someone that they just met. I mean, we can send all that information to them. We also can share our own pay history with them. So if we have a client, because of our size and long time in the industry, we can share with our clients, yes, the D&B report says they're going to pay, or they're telling you they're going to pay in 30 days, but our average pay for this debtor for the other clients to do business with them is actually 45 days or 46 days. So we can share kind of that pay history with them as well to help, to help that company grow and not take on a risk that they're not at least educated on. So, and that's free of charge. So that's just a service we provide to them.
And just real quick on that, and I legitimately get that question every single day. Somebody will call up, especially the transportation industry. Stu, I'm sure you do too. And they're like, Rob, I'm getting ready to haul a load for this client or this debtor. Can you please see if it's a good credit-worthy customer? The beauty about our transportation division is once a client is on board with us, we're able to give them access to free load board and credit checks as well, where they can log in and do it themselves. A lot of times they're trying to book loads in the middle of the night and they're on the road, so they're able to log on and say, yep, that's a good debtor, and we most likely will factor it. So it's just another tool that we have to help our clients out.
Right, I think that wraps up our presentation. As mentioned earlier, you can contact any of us if you have any questions after this webinar, but Rob and Stu are the main contacts for the event, and we'll be attending in Nashville. So if you would like to visit with them in person, sit down, visit with them, have lunch while you're there, I'm sure they love that opportunity. Any other?
And anybody that refers the deal from this moment on up until the live event in Nashville that we fund in 2021, we're having a promotion that not only we're paying the 10%, we're also giving away a Yeti cooler for each one that closes.
Awesome. We have one question. Again, if anybody has any questions, please type them in the Q&A box and we'll get them answered. Bill wants to know, do you have a form with 5 to 10 questions that you can send to a prospect to kind of pre-qualify them with you?
That really, yes, to answer your question, yes. But that really is going to be industry specific. So what I would suggest would be to reach out to Rob or myself, and we can kind of work that over together. We've got, like I said, marketing material and collateral in place currently. But questions that you're going to send to a manufacturer, you're not going to ask a staffing company. And questions you're going to ask a staffing company, you're not going to ask a trucking company. So they're really going to be industry specific.
Yeah, so if there's some top industries that you focus on or you see a lot of, let us know that, and that'll be really helpful. But that will be really easy for us to put together if you have that information.
Great. Michael, did you have another question?
Just when will this slideshow be sent? Only because I can't move this screen and the slides are too small for me to capture the email addresses.
Sure, we're going to be, we'll have this up probably on YouTube later today, and then I'll post it on the Meet the Funder page of the website. So, and if I'll be sending the list of contacts out to Gulf Coast so they can reach out to you as well.
Appreciate everybody taking the time as well to hop on this today.
Yeah, we look forward to seeing everybody in Nashville if you're going.
Yes. I don't see any other questions. So with that, we'll just wrap things up. A big thanks to all our participants and especially our valued funding source and gold sponsor, Gulf Coast Business Credit. Thanks for a great job, everyone. We invite everyone again to meet with Gulf Coast Business Credit in person at our annual conference coming up this September in Nashville, September 8th through the 10th. Thanks again for joining us and have a great day.
Thanks, Monica. Thanks, everybody.
Thank you.